Belarus's currency, the hryvnia, yesterday fell to the lowest level since 2009 as unrest deepens in Kiev. At least 3 people are believed to have died in Wednesday's protests. These are the first deaths since the onset of the conflict between President Viktor Yanukovych and pro-European protesters. Bonds have also suffered by the political turmoil. The yield of the country's international dollar bond maturing later this year rose more than 3 percentage points to 9.3%, above the yield of its 2023 bond, which increased more than half a percentage point to 8.52%. Now, foreign investors interested in debt markets are not too concerned over bond yields as they still remain below early December highs. Protecting the hryvnia, however, has been on top of the government's list of priorities. Deputy head of the National Bank of Ukraine remains calm about currency fears, believing the reduction of prices for imported gas and Russia's opening a credit line will help improve devaluation pressure on the currency. This week, he said, now the trend is that the market itself is able to balance supply and demand. There are no real prerequisites for a hryvnia devaluation. December's agreement on a $15 billion bailout from Russia provided the country with the resources to improve external debt, rebuild foreign exchange reserves and protect the currency. The drop in the currency shows the concerns of local companies and individuals. However, many experts believe the hryvnia has been overvalued. In December, the IMF pointed out that the exchange rate had made Ukraine's current account deficit wider and its exporters less competitive. The need to tighten monetary policy had a negative impact on growth. Tim Ash, an economist at Standard Bank, wrote, "Undertaking any currency reform in a post-Soviet setting, when they have limited FX reserve cover and somewhat uncertain external support, is fraught with difficulties." Mr. Ash believes even though it would be beneficial to exporters, it would be problematic for inflation. He went on to say an exchange rate crisis would probably be the last nail in the coffin of the Yanukovych administration. Well, viewers, that is it for right now, but do stay tuned as we have plenty more coming your way.